Alright, this is my second video, and in this video I'm going to be explaining to you in a simple term what you need to be watching out for in the market if you want to enter a trade. First of all, you need to understand time frame. Now, a lot of people used to do something wrong. If you want to analyze, you should understand that we have people that are a day trader. We have people that are scalper. We have people that are swing trader. Now, swing traders are people that are going to look for opportunities on the higher time frame. Let's say a weekly time frame, daily time frame, monthly time frame. Yeah, we have people like that they they can wait the whole month. They can wait the whole week just for them to see a perfect opportunity in the market, and then they enter the trade, and then they are going to be holding that trade for long term. Do you understand? So they are going to be predicting like 1,000 pips, 2,000 pips, 3,000 pips ahead. We have traders like that. Then we have a day trade. Then we have scalper. Now, as a scalper, I've seen people that always say, I my entry point is always on 1 minute. I use 1 minute to trade. As a trader, I don't know what you want to be doing in 1 minute, using 1 minute to analyze or enter the market. I don't know because all this smaller time frame, you always find manipulation on smaller time frame. So I'm going to be explaining in short term. I don't want this video too long. I'm going to be explaining to you in short term what you should be looking out for in the market. Do you understand? And then the time frame you should be using. Now, the way I trade, you should always look for opportunities on higher time frame, like at least 4 hours time frame. Even as a day trader, you look for opportunities on 4 hours time frame. Let's say you draw your trend line. I believe everyone knows how to draw trend line. You draw your trend line, and then after you are done drawing your trend line on 4 hours time frame, just like I'm on BTC chart now, BTC USDT, and I'm on 4 hours time frame. You should know that every candle on 4 hours time frame, every candle represents 4 hours. Every candle you see represents 4 hours. Now, there is something you should be looking out for. And in this video, I'm going to be talking about point of interest. The point of interest. What you should be looking out for. Now, there is something a lot of people used to miss. And I believe once you understand this, trading becomes easier, irrespective of the time frame that you want to use. This is what I have, you know, backtest, practice, and then it works almost a lot of times, and it works on every time frame. So what you should be looking out for is that there is always one candle in the market eh, that is always a very sharp candle. So this candle can be a bullish engulfing candle, a bearish engulfing candle. And how do you know a bullish engulfing candle or a bearish engulfing candle? These are candles that, let me give you an example. You might see that, okay, the market is doing something like this, something like this, something like this. And then suddenly you see a sharp uptrend. I hope you understand. So what this simply means is that market can do, maybe the market is coming down, coming down, coming down like this. And all of a sudden you just see something like this. You see this one big candle represent what? An engulfing candle. This is a bullish engulfing candle. So you can see something like that on a downtrend as well, like a bearish engulfing candle where you can just see the market going up like this. And all of a sudden you see a sharp candle. This particular candle is a bearish engulfing candle. So what the market usually does is that the market will find its way back to rally up to that point where this impulsive move started, and then it will start coming down. Do you understand? So your job as a trader is to identify, to understand some of these candles. Do you understand? Some of these candles, a bullish engulfing, a bearish engulfing. Now, how do you know a bullish engulfing, a bearish engulfing? Now, there are indicators that is going to show you clearly bullish engulfing candle, bearish engulfing candle. Yeah, but it's not everybody that has that indicator. But even if you have the indicator that shows some of this confirmation entry, it is important as a trader to understand some of this confirmation entry without an indicator. That is what makes you a good trader. You should be able to spot confirmation entries by yourself. Now, there are different kinds of confirmation entry. We have bullish engulfing, bearish engulfing, we have hammer, we have shooting star, we have evening star, we have a lot of them. Do you understand? But the major one, you can go to ChatGPT and ask different types of confirmation entry. It's going to give you a lot of them. If you ask it examples, it's going to give you clear examples of this confirmation entry. Now, once you understand confirmation entry, then the works become easier for you. The works become easier. Now, I'm not here to talk about market structure. I'm going to do another video about that. But today, I'm just going to be pointing out what you need to be looking out for in the market for you to make an informed decision. Maybe you want to buy or you want to sell. Point where you should be buying, point where you should be selling from, and where you need to take your, as in put your take profit and your stop loss. That is the purpose of this video. So let's go to the chart. Now, looking at this chart, this is 4 hours time frame. Now, you are going to see, I'm going to be pointing something out. You can see this move, this particular move here. You can see a very, very sharp candle, red candle. That sharp candle caused a break of structure, and you can see it here. This is a break of structure, a clear break of structure here. Do you understand? So it means that the market find its way back up to where this move started. Do you understand? And as you can see, we are in a bear market already. The market is on a downtrend. I hope you understand. The market is on a downtrend. So we are still expecting more downtrend. So you can see what is happening here. So I'm not going to be drawing trend line, because what you know is different from what I know. We as a trader, we have different strategy. People are trading ICT concept, people are trading SMC concept, different strategy. But me, aside ICT, aside SMC, I am telling you what works, what you should be looking out for as a trader. Do you understand? Now, there is this one big candle that you are going to see. Always look for that one big candle where you saw a sharp move in the market. That is where you should be selling or buying from. Do you understand? Don't just enter the market anywhere you feel like. Don't just feel the urge to just say, I want to just trade, I want to enter the market. You always lose like that. But when you wait for the market to come to a point of interest where there is impulsive move, either bullish or bearish engulfing candle, you see that candle, first of all, you need to identify, okay, what is the structure of the market? Is the market the downtrend, on a downtrend, or is the market on an uptrend? I hope you understand. So if the market is on an uptrend, you need to look for a point of interest. And how do you find a point of interest? Then that is where you need to understand all this confirmation entry, bullish engulfing, bearish engulfing. And the rule is this: for every bullish engulfing that you see, I have explained bullish engulfing. Bullish engulfing is a sharp candle that causes a break of structure to the upside. Bearish engulfing is a down sharp candle that causes a break of structure to the downside. The market always reverse back to that place, that point where the market caused the move, that impulsive move started, market always reverse back. An example of what I mean is that you see this particular candle here. You can see that the market rally up, and then we are expected to see a downtrend continue, a continuation of the downtrend. That is what I mean. So if I am selling here now, if I am selling here, I'm just going to be putting my stop loss at the swing high, the last swing high. That is where I'm going to be putting my stop loss. Then I'm going to be targeting this place that you are seeing here. I'm going to be targeting this place as my take profit. You don't need to go and be putting unrealistic take profit for yourself. Take for instance now, I enter a trade at this place, and I went to go and set my, what's it called, my TP here. Good, the market might come down to that place where I put my TP, but you need to understand break of structure. So every time the market breaks structure, you should target that particular place where the market broke the structure, the last low or the last high. That is where you should target. Once you take your TP, just wait for the market to do what? The market can decide to reach here and then stop here and then do what? Start going up. Sure, you understand? But if you enter a trade and then you see that, okay, the trade did this, you have taken profit here, just wait for it to break structure. If the market breaks structure, it will definitely come back to that zone where it broke that structure and continue the down movement. So if you are looking for a point of entry that is going to give you a good risk to reward ratio, always use 4 hours. Do you understand? So if you go to 15 minutes time frame, you are going to find all this confirmation entry, bullish engulfing, bearish engulfing candle. Some of these candles, you are going to find it on all the time frame, either 1 hour, 15 minutes time frame, 30 minutes time frame. You are going to find it there. So I'm going to be showing you an example now. If you check here, you can see that there is this candle. There is this candle. And then what does the market do? The market find its way back to that zone where you see the candle first started going down. I hope you understand. Another one happened here. You can see that there is this sharp downtrend candle. Now the market find its way back to that zone and then started going down. It always happens like that. Now for the uptrend, you can see that there is this sharp candle here as well. This one sharp candle. Now what does the market do? The market rally down back to that zone and then mitigate it and then start going up. This concept is very, very easy to understand. And then by using this concept, you will not be losing a lot of money. It's going to save you stress. So I'm going to be dropping a lot of trading ideas that is going to help you trade better. So follow my channel for videos like this if this content is helpful to you. I am Olimman. Bye.